Hi guys, welcome back to the channel. So it's the end of the year and people are making plans and new year resolution. And I just wanted to get this video out there to talk to you guys about the current trend about people talking about a foreclosure crisis, as well as the sky is falling and real estate market is going to crash. And there's just been a lot of YouTubers and celebrities and sensationalists talking about, oh wow, the market is going to crash in 2026, the world is going to end. And let's step back and let's take a look at the data. Let's look at the facts. So, what I have up here is the US properties with foreclosure filings. These are the number of people that filed for foreclosure going back to 2005 up to 2025. So, you're looking at a 20-year window. And what you can see on my screen here is that that number increased sharply between 2005, where my mouse is pointing here, up to 2009. You can see the steep climb here, and that's because the economic collapse of 2008, and there's a huge foreclosure filings by a lot of people. So, but then if you go back, if you zoom in, if we're to zoom into 2025, this is where we are, you can see that, sorry about the image, that line just about flattens. This is Q3 of 2025, and there's not been a major uptick in foreclosure filing. So here's 2020 here, and you kind of go up here to 2025. It's almost about flat. So number one, I do not foresee any foreclosure crisis in 2026, at least not from the data we have going back to 2025. And even if it were to happen, for the one in 2005, it took a span of about 4 years from 2005 to 2009. It took almost 4 years for this foreclosure to happen. So why will it just happen all of a sudden? You can see here, if we go into 2020, this is where COVID-19 happened, right around here. And that line has since been just about flat. There's a small uptick between 2024 and 2025, but still, it's still generally a flat line. So we don't see any foreclosure coming very soon. And if it were, it would take some time for that to happen. The current data is showing that that is not the case. So the other data I wanted to point to is something more local to the Pacific Northwest. And this is RMLS data, the Regional Multiple Listing Service data from October of 2025. What's obvious is that the number of active listings has increased between October 2024 to October 2025. So it's gone up by about 15%. So yes, there are more listings, and that's just to say that the economy is probably not doing very well because there are more houses going on the market. Between October 24 and 25, it's about 15%. To me, that's a market indicator more than anything else. An average listing is spending 72 days on the market in October 2025, and that's 9 days more compared to October 2024. To me, that's a major indicator of something wrong fundamentally with the economy. And that is the fact that you have this slight uptick in the number of active listings. More people are listing their houses for sale. And one thing we also have to look at is the market is not slowing down anytime very soon. So when people are saying, oh, the market is going to crash, the data is just not supporting that. So let's take a close look at the average sale price. The average sale price is 561,300. Now that's only 0.3% higher than October 2024. What this tells us is that the price of housing has gone up by 0.3% year over year between October 24 and October 25. So when people are telling you, you're watching all these YouTubers saying that the market is crashing, 2026 is going to be doomed, and everything is going to fall apart, the data is just not supporting it. Between October of 24 and October 25, housing prices have gone up. Yes, there are more listings, which means more houses are spending more time on the market, but buyers are not budging. Foreclosure numbers are not rising. Instead, they are kind of flat when you step back and look at the big picture. The market is not slowing down anytime soon. Housing is not something that is readily available. And also, as of December 1, 2025, the Federal Reserve is ending its quantitative tightening and freezing its balance sheet to a particular specific level rather than starting quantitative easing. What that means is that the Feds will stop shrinking their balance sheet, but will not actively be buying assets. This means that the Feds is actually monitoring the situation, and it's going to possibly reduce interest rates. And once interest rates are lowered, guess what? The market is going to get hot. The market is going to get more competitive. So real estate in 2026 might actually be about what we saw in 2025, but with a lower interest rate. They already dropped the interest rates twice this year. And we expect that even in December, they might drop it by another quarter basis point. And at least into 2026. If you recall, the President Trump, has been wanting the Fed to reduce interest rates. So if there are people out there telling you, oh, the market is crashing, there's going to be foreclosure, don't listen to them. So when is the right time to buy real estate? That time is now. Yes, I know everybody says that, but if you are an investor and you want to be bullish on the real estate market, this might be a very good time for you to do that. So I think that you should probably think about that. And that is why you should get my book on how to buy a house as a pro. I'm going to put in the link in the description below. Get a copy of it. Do not let the fear or just the noise out there by people who are not data centric or people who are not objective to sway your belief. And if you want, you can also sit on the sideline and see what happens through the end of 2025. But the data that we have currently is showing that the market is not slowing down anytime soon and that the real estate market is actually going to thrive into 2026. Let me know your thoughts if you disagree. Leave a comment in the section below. Thanks for watching, and I'll see you in the next video. Bye, guys.